Hello everybody, here is again the lecture on inheritance tax. We are in the chapter concerning the German inheritance tax to give you an example of how a concrete inheritance tax law might work, and we are still busy with exercise cases. So here there is another one. Sam Play is the owner of a business in Germany, where the famous sample cases are manufactured always. Sample is living in Cologne, Germany, and now when he dies on the 1st of March in the current year one of the current case, he leaves all the following assets and items to his daughter Daisy, who also lives in Cologne, Germany. There is first to mention a house in Cologne where Daisy already has moved in last year. She is going to stay there for all the rest of her life, and the house has 180 square meters, so it's a medium-sized one, and a market value of 540,000 euro. Now, please don't criticize me for the house values in Cologne. I have no idea how the market values there really are. Furniture and chattels in that house amount to 50,000. Okay, that's also a rather modest life standard of living for some play, but it really well fits to our case. Then some play has a business in the form of a sole tradership, whose value for tax has been correctly determined by others already as 1.5 million euro. The one and only permanent establishment of this business is in Cologne. Daisy is not sure if she, in order to maintain the profitability of the enterprise in the long run, will be able to keep all the employees of the enterprise. She probably has to rationalize, so to dismiss the one or other employee in the course of the future. For this reason, she is not sure if she can give a guarantee that 100% of the present wage payments level can be kept during the whole next 7 years, but she is absolutely sure that she will be able to maintain a level of 80% of the current wage payments during the next 5, 7, or even 10 years. Daisy is furthermore strictly determined never to withdraw more than half of the annual profits from the enterprise each year, because she wants desperately to invest the rest in order to guarantee some innovations in the equipment of the enterprise. A private bank account is also there, 20,300 euro. Shares are also existing. Portfolio investment is that, so minority shares with a market value of 80,000, and that's it. There is nothing else left. Your and my task is now to solve that case. There is again the recommendation: stop the case here and have a look on the task. Try to solve it, and later compare your solution with mine, which is going to follow soon. Naturally, as with all these case solutions, keep in mind this is a solution from the year of 2021. So if later there might be the one or other detail which you do not absolutely grasp, let's say if you view that video some years later, always keep in mind there might have changed something in the meantime. Okay, so let's stop a bit, have a small break, and then continue with our solution. So to begin with the case, the first thing we have to do is to look for the tax acts again, because no legal stuff has to be done and can be done without the legal texts. So take them. Keep in mind that every translation is only an inadequate reflection of the original text, so don't trust anything too easy. And then we go to the inheritance Tax Act. There. And probably the first and most important thing is now paragraph 1. Subject to inheritance tax and gift tax are acquisitions on ground of death. Now here we have an inheritance tax case. Somebody dies and the property goes to the next generation. So we can presume that is an acquisition on ground of death, but we should try to be on the safe side. So remember, paragraph 3 defines what an acquisition on grounds of death is. Here it is, the acquisition by inheritance. So we can be reasonably sure, yes, we have to deal with a taxable event here. Let's note it down. So, okay, taxable event, that's the question. And yes, we have an acquisition on grounds of death because inheritance, paragraph 3, section 1, number 1 of the German Inheritance Tax Act, the Erbschaftssteuergesetz. So it's a taxable event under paragraph 1, number 1 of Erbschaftssteuergesetz. The next question is the question of personal tax liability. And this, for sure, has to be solved in the way that we have to deal with unlimited tax liability. The reason for this was under paragraph 2 that at least one of the two persons involved, the deceased and the heiress, live in Germany, because at least one of the persons involved lives in Germany. Now, the rule was paragraph 2, number 1 of the Erbschaftssteuergesetz. And just to make that sure, we should have again a short glance on that text. And yes, okay, we seem to remember the reference to the law correctly. 2.1, sentence 1, number 1, the tax liability covers the complete property transferred, blah blah, and so on, if the acquirer or the deceased at the time of death or the acquirer at the time when the tax arises is an inhabitant of the inland, and an inhabitant of the inland is a natural person who has a residence or the habitual abode in the inland. That's the case here for both of them. So yes, we are sure and can keep that line as it stands. We do not need to change it. So one might add letter A because that was the exact point where the inhabitant of the inland definition could be found. Then the next entry is tax arisal happens when? That is at the moment of death of Sample. Here, 1st of March in year 01. By the way, year 01 with an asterisk is not the year 2001, but the first year in the current case history. And by definition, all years in the case have the same legal situation, namely the legal situation exactly of today, so that we do never have to bother about any transitional rule problems when a law was slightly changed or so, because for beginners it makes no sense to confront them with former versions of the law. There the best assumption is just to say, okay, the present law situation was always the same. So 1st of March 01, and I believe that was to be found in section 9.1, number 1. But as you have already probably realized, or at least hopefully have already realized, We have to look that up if that's really true, because we must be sure that we don't write some wrong things down. And yes, indeed, as we can see here, the tax arises in cases of acquisition on grounds of death with the death of the deceased person, but certain exceptions, condition, compulsory minimum legacy, no, 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 and no, all that as a no, so we remain with the basic rule, the general rule, the time of the death. So what we now do is we just turn to the tax base. The general rule for the tax base is the tax base is the enrichment of the acquirer. So what Daisy gets, this is paragraph 10, 1, sentence 1, 2 of the Erbschaftssteuergesetz. The valuation has to be made according to the situation on the day of the arisal of the tax. You can see that in paragraph 11 of the Erbschaftssteuergesetz. Okay, look it up and then we can go on. So what we have to do here now is to add all the items up, deduct the liabilities, and then talk about tax exemptions. So concerning number 1, house in Cologne, that's to be valued with the market value. That is to be seen in 12.3 of the Erbschaftssteuergesetz. And that is here given with 540,000 euro. But now the test is if it's not tax-free. There was something in paragraph 13, something in the number 4 area, but it was not strictly number 4, but it was for A, V, or C. So we should look that up again, naturally. Okay, first, just to be on the safe side and to be absolutely sure, let's check if our reference for the value of the house, 12.3, was really the appropriate one. And yes, in general, it's 12.1. The valuation has to be made according to the rules of the Bewertungsgesetz, the German valuation law, first part. But if there is a special rule that prevails, a special rule is in paragraph 3 for real estate property in the inland, and in paragraph 7 or section 7 for real estate property not in the inland but abroad. Okay, so we cited 12.3, so that was right. Now let's look through paragraph 13, ladies and gentlemen. There were tax exemptions probably for what is called a family home. So that somebody moves in there or lives in the house of the parents and takes over that house and keeps it for, yeah, probably for all his or her life. But recommended by the law is a time of 10 years after the inheritance tax. Then it will be left completely tax-free. Let's have a look here. Not number 4. This is donations connected with the house to the spouse. No. Acquisition by the surviving spouse or surviving life partner of a house. No, not our case. 4C. The acquisition on grounds of death of immovable property. Yes, a house situated in the inland, the EU or EEA area by children mentioned in text clause 1, number 2, or children of deceased children, as far as the deceased used rooms therein to live there himself, and as far as the rooms do not exceed 200 square meters. Note the as far as, that means even if the house is bigger, that percentage which corresponds to up to 200 square meters is tax-free. An acquirer cannot claim the exemption as far as he is forced to transfer the privileged property to a third person. And the exemption will be revoked with effect for the past if the acquirer within 10 years after the acquisition does no longer use the family home for his own living there, except in those cases where he is hindered by compelling reasons from using it himself. So if, let's say, the acquirer dies after 7 years, nobody really requires it to stay 10 years inside that house. Such things must be clearly stated, because otherwise the fiscal administration would revoke the exemption if you die too early, or if you have to leave that house and go to hospital. Whereas if you take up a job somewhere, let's say in South Africa, and if you can for that reason no longer use that house, then it will be a fascinating, research to find out if the fiscal administration of Germany accepts moving for business reasons as a compelling reason, because there you had a choice. By the way, if you want to clear up situations like these and questions like these, there is nearly to every rule in Germany a circular, so a letter of the Federal Ministry of Fiscal Affairs, which lays out to the members of the fiscal administration how the fiscal administration has to apply and understand the law. So there you can always find out which point of view the fiscal administration holds, and if you hold the same view, then there will be no dispute concerning your tax declaration. Well, naturally, for beginners, that is nothing where one goes into details, but only that you see if there are questions concerning the interpretation of the law. Naturally, with an 80 million people, 80 million persons population, you always have had a case already somewhere, so there will be an official point of view of the fiscal administration which you can find out. But we are not going into details here because we don't need to. Our case is a very, very clear one. The house is less than 200 square meters, and it's clear that Daisy will live in that house for eternity, probably. So there is a tax exemption for that house completely. So what we had to test was 13, by the way, subparagraph of section 1, number 4c, Erbschaftssteuergesetz, and the house was used by the former owner for own housing purposes or living purposes, and is taken over by the heiress, and she will not move out during the next 10 years. So the acquisition of this family home is completely tax-free. By the way, this is naturally a very, very strange exemption, because the idea is we do not want to force the heir to part with the family home in order to pay for the taxes. The problem is, well, a child, and she is a child of tax class 1. So she is entitled to that exemption. That was a further requirement. The strange thing is, well, if you are a child of tax class 1, you are entitled already to a personal allowance of 400,000. So for people who do not inherit an enormous fortune, there should be no need for such an exemption, because they will not need to sell the house in order to cover the inheritance tax. The same Or another strange misunderstanding is, well, an inheritance tax always forces you to sell a part of your property or to take up a credit in order to cover the tax, because that is how a tax on property works. And in the theoretical part of the lecture, I already told you, okay, it is definitively a misunderstanding or a wrong approach to give an exemption for all those cases where you see, oh, parting with a part of a property of the parents, that is emotionally distressing, that causes grief, that gives us sympathy, because then you can forget about the whole idea of such a tax. The right approach would be just to modify the payment modalities. So this is a very strong argument to develop or to design such an inheritance tax system in a different way. You remember, I hope, my proposal, it would be far better to abolish all these rubbish exemptions and replace them by a rule that the inheritance tax is always paid in slices of only 1% of the inheritances per year until you have paid off your personal inheritance tax liability, because that should be possible for everybody. Well, but as things are at the present day, this rich Daisy gets that house for free, whereas a cleaning woman's child, no, a cleaning woman's child, where that cleaning woman leaves 405,000 euro, where that child, yeah, might be in form of a house and in form of a bit of cash, where that house is then left, might be that somebody who is poor can have inherited already from the former generation a house which has a high value. Now the son or daughter who inherits that house cannot move in, and so will have to pay inheritance tax, although in that case the family in question is far, far poorer. But, well, the law stands as it is, and in order to change it, we probably have to do what somebody recommended already some 1 or 2 centuries ago. We will have to wait for better men and women in parliament. Now, number 2, the business. Naturally, it is to be valued according to the tax rules, let's call it this way. And we will find that somewhere in paragraph 12. But where exactly is something which we have to look up. So, concerning business property, you find indeed a special rule in 12, subparagraph 5, business property for which a value has to be found according to 151 sentence 1 number 2 Bewertungsgesetz is to be valued with the value and the valuation date. Yeah, so the valuation law contains specific rules how the valuation of a business property should be made. You know, enterprise valuation is a science in itself, or better, an academic discipline in itself. There are different theories how to debate about the market value, adequate market value of a unique enterprise, and so you need some more specific rules how you can find an approximation of the market value. Okay, now that was the one thing, but we can already jump a bit to the next point, because you will probably remember that there was, concerning business property, there was an exemption, a far reaching exemption if you fulfill certain obligations to keep up the enterprise, to not plunder its substance, to not cancel all the jobs, and so then you can get along with an exemption for most of the business property. And you probably remember there was a basic option where you get a tax exemption of 85%. And there you have then to fulfill conditions. For example, a wage payment condition, where during the next 5 years the total of wages paid, the minimum wage total, must not be lower than 400% of what you paid in the average of the last years. Now this is exactly the condition which Daisy could fulfill. She is absolutely sure that during the next 4, 5, or even 10 years, she will always pay at least 80% of the former wage level. And now that's clear, 80 times 5 is exactly these 400%. So that is the exemption which can be applied. We assume that some lower restrictions do not apply. So special cases which are even more advantageous because we don't need them. Furthermore, you cannot claim the exemption if you transfer the business to somebody else. So if you do inherit the business, but then do not keep it, naturally. Furthermore, if you sell the business, a branch of the business or so within 5 years, then not. Furthermore, if you withdraw assets to the private sphere, that would also be damaging, especially if you withdraw more than all your contributions and profits in these years. Now Daisy says she is absolutely sure that she will always leave half of the profit in the firm. So this condition will then also be fulfilled, 13A6 number 3. Okay, so what we can sum up is that this business has to be valued according to 12.5 Erbschaftssteuergesetz, that this here is 1.5 million euro, that furthermore an exemption of 85% of the business property value can be obtained under paragraph 13A1 of the Inheritance Tax Act because the conditions, minimum wage condition, (400% during the next 5 years), see paragraph 13A, and let's remember, what was it? That was subparagraph 3. And the withdrawal condition in paragraph 13A6 Erbschaftssteuergesetz can all be fulfilled here. So 1.5 million times 85%, that is 1,275,000 euro can be exempted. Remaining amount of taxable business property is 225,000 euro. Now, there is another thing. Furthermore, there is also a business property free allowance. In paragraph 13a2 of 150,000 euro, but let's have a look to that to see to the details more clearly. And we are going to do this immediately because that 150,000 is not always granted. The exemption is phased out gradually. That means it is step by step reduced until it arrives at zero again, the more the taxable business property exceeds these 150,000. Let's have a look how it works. Well, here we have that business property free allowance. The privileged property remaining after the application of paragraph 1 remains unconsidered. That means it's left out of the tax base. So it's tax-free. Put it plain and simple. As far as it does not exceed 150,000, that is the business free allowance, in German the Abzugsbetrag für Betriebsvermögen. Now, sentence 2 says, well, this is only half of the truth. The business free allowance of 150,000 is gradually reduced by 50% of that amount by which the property exceeds the threshold of 150,000. And this free allowance can only be taken into account once within 10 years for acquisitions from the same person. That is clear, by the way, because all business acquisitions within 10 years from the same person would, under all conditions, be added up. You know that. So this third sentence is more only a kind of a clarification of things which are clear. The decisive sentence for us is sentence 2. So let's calculate what remains of the free allowance. So, but this free allowance is reduced by 1/2 of the amount by which the remaining privileged property exceeds 150,000. That means 250,000 minus 150,000, that's 75,000. Half of that is 37,500. So 150,000 reduced by 30, that is 112,500 euro remaining free allowance. So taxable business property is 225,000 minus 112,500. That is 112,500. This is, by the way, only a strange coincidence that exactly half of the business property remains. We have made here an assumption on a fact on which the case description is not entirely clear, so vague, that all business property is privileged in the sense of paragraph 13b of the Erbschaftssteuer Gesetz. That is not automatically true, but I just make this assumption now because otherwise there would be no free exemption, or we would not have the relevant data. Now, the next thing we have to deal with is the private bank account. This is to 20,300 euro to be valued with the monetary, so nominal value, that's clear, 12.1 of the Erbschaftssteuergesetz in combination with 12.1 of the valuation law and common sense, by the way. And B, that is the shares to be valued with their market value. Naturally, it's also 12.1 of the Erbschaftssteuergesetz in combination with the Bewertungsgesetz. Now we should honestly look up which paragraph that is. I believe it could be paragraph 11, so let's have a look to that. Yeah, so let's look to the valuation law. My supposition was it, oh, that's wrongly, oh my god, here the link is wrong. So 11, that's partial value. Securities and shares which are on the relevant date allowed for trade in the regulated market in a German stock exchange are to be valued with the lowest value which is fixed for them on that date in a regulated market. If there is no fixing of a value on the relevant date, then the last value within a period of 30 days is relevant, and securities which are traded in the so-called Freiverkehr are to be valued accordingly. So yes, we need the market value. Okay. So if there is portfolio investment, there will in all probability be a stock exchange value, and we can assume that this is what we have given here in the text. So indeed, it was paragraph 11.1 of the valuation law. And that market value was here, 87 euro. Okay, now I must admit that I completely have overlooked the furniture and the chattels in the house. Well, they are to be valued with their market value. This is so-called common value. That's 12.1 of the Erbschaftssteuergesetz in combination with paragraph 9 of the valuation law. That's here 50,000 euro. But for household property, so furniture, inherited by someone of tax clause 1, there is a free allowance, 41,000 euro. See paragraph 13, 1, number 1, letter A of the Inheritance Tax Act, plus a further allowance for other movable property up to 12,000. Paragraph 13, 1, number 1, letter B. So remaining taxable amount 50,000 minus 41,000 minus 12,000 is 0. Just to make that sure, let's have a glance on the relevant rules again. As you see here, household property up to 41,000 if inherited by positive tax clause 1, and other movable property which is not exempted by number 2 in case of acquisition of persons of tax clause 1 as far as it does not exceed 12,000. So yes, so all that is tax-free. Now the next stop is minus liabilities. And here no liabilities are mentioned, but we have then 10.5 number 3 of the funeral costs minus 10,300 euro. That leads us to summing up the addition. We have 0 because of 1. We have 0 because of number 2. We have a leftover amount of 112,500 because of number 3. We have 20,300 plus 80,000 because of 4. We have minus 10,3, and that altogether is 112,000 plus 90,000, that is 202,500 euro. And now surprise. Think about the personal allowances. Well, here we have tax class 1, number 2, a child. You can see that in paragraph 15, paragraph 1, subparagraph 1, tax class 1, number 2, I hope so. Now, number 2 is what I guessed just now, so we will have to look that up. And then the personal allowance is paragraph 16, 1. I believe it also is number 2 of the Erbschaftssteuergesetz, which says that personal allowance is 400,000 euro. And this, if that correctly applies, will lead to an inheritance tax of absolutely 0. So let's check this up again. So, yeah, okay, seems to be correct. By the way, nobody will ever expect from you as beginners or even as advanced learners that you know the paragraphs by heart. That is only a teacher's fate after some 15 years of teaching. And then when we finally know it by heart, then a year later, the whole text will become changed. So never have the idea you should know things by heart. Just look them up. But naturally, as with me, you will have after a certain time the idea that this probably, you remember last time I found it somewhere, well, let's say in paragraph 15, so you directly look it up at the concrete point which you have in mind and try to become sure. And but you always check your ideas. Well, that was this, and now 16. Was 16 really that what we had in mind? Yes, 16.1, number 2, children, and the children of deceased children, as mentioned, 400,000 free allowance. So that is really what we had found out, and that leads to the surprising result that indeed 0 tax base remains. So the tax base is 0 euro. So the tax is naturally 0. And that's the end of the case. Finally, so congratulations, we survived that successfully. And well, naturally, it is not recommendable to forget an event in the middle, as I did here, but that is something which you should keep in mind when you come to the end of a case. Check if you did not overlook something. That might be a helpful step. Okay, so that was this case. Thank you for watching. I hope you found it interesting. And well, let's wait together for the next video, which is going to come on this matter. So, if you watched this video shortly before Christmas, I wish you a good and happy Christmas holiday. If you watched it later, shortly before Easter, then I wish you a good Easter. And if you watched it neither shortly before Christmas, shortly before Easter, then just go away and enjoy the rest of the day. Goodbye.